Welcome to the Investing Podcast, presented by Tusk Media. Now, for your early morning look at financial news and activity in audio and video form, here's the Morning Market Mimosa.
Hey everybody, welcome back to the Investing Podcast, the Morning Market Mimosa for Wednesday, September 21st, 2016. Happy Hump Day. I'm Andrew Hall. Joining me as always in the morning, Ben Nye. Ben, what's up?
I'm doing well.
Busy day, real busy day. We got a lot to catch up on. We weren't here yesterday. We took a day off for personal reflection in the wake of the Brad Pitt, Angelina Jolie split. Kind of rocked us hard. I don't know how if you're recovering.
Well, I mean, I was feeling pretty good after the weekend because of my record in the football, but it brought me down, man.
Roller coaster of emotions this week for Ben. Yeah, it's been pretty heavy. Lots to talk about today, so we'll jump in. Futures are up pretty much across the board. Dow futures up right around 1/3%. S&P futures up 33 basis points, so right there as well. NASDAQ futures up a little more, up 43. Gold up 1%, oil up almost 2%, 1.77%. But the big story, the dominant story for the month, for the year, for the decade, for the day, Fed announcement coming today, 2 p.m. We're going to get opening remarks. We're going to get a press conference, all that good stuff. What are we going to hear?
Well, BOJ kind of tried to steal the spotlight this morning, but as far as the Fed goes, I think it's going to be kind of more of the same.
Yeah.
I think they'll probably say the data has improved because that's what Yellen said just a few weeks ago. But I don't think they're going to hike because I don't think the market is there yet. Mm-hmm. And we have seen a little softer data so far in the last couple of weeks as with the ISM data and some of the employment data, just not as strong as it has been.
So I don't expect a hike. You don't expect a hike. If we were to get one, what kind of market reaction are we going to get?
It's interesting. I think banks outperform.
Mm-hmm.
I think insurance companies probably outperform. It would be really interesting to see what happens on the curve itself, on the Treasury curve, because obviously the short end should go up. Mm-hmm. But will rates on the long end go up, or will they actually come down?
Right.
I would also guess that stocks would fall. Gold would probably be hit.
Yeah, I definitely think you'd have kind of a surprise reactionary reaction.
Right.
Yeah.
I think regardless of the reaction though, you come back in next week or something and start to fade the move, because I don't think it'll be a big, meaningful, long-lasting effect.
Yeah, it's kind of one of those things. You know, if you go back to the grand history of rate hikes, rate changes in general, even if you were to be surprised today, the scale of that in the grand scheme of things of what we would actually see with a hike is so minuscule compared to things that we've seen in the past. So I do think the market would kind of react sharply if there was a surprise, just because that's what the market does. The street does not like surprises. But thereafter, I do think we normalize pretty quickly. You mentioned BOJ kind of stealing the show this morning. Bank of Japan, talk to us.
Yeah, so over the last few years we changed this in December. Our short-term rates are now 25 to 50 basis points. Mm-hmm. Are now 25 to 50 basis points. Before they were 0 to 25 basis points is the range. In Japan, they are now targeting the 10-year rate. So you give them your money, you give the government your money, you get it back, no interest in 10 years. They're targeting a 0% rate for the 10-year JGB note.
Which we've said before, like, we can do that.
Right.
If you want to give us all your money in 10 years, we'll give it back to you.
Yeah.
Same amount.
Yeah.
I feel pretty good about that.
Yeah.
You feel good about that?
I feel very good about that.
Yeah, so in light of that, I mean, you see that type of target, you see that type of policy in terms of what they're looking at for a long-term rate. And it gets real hard to think, hey, another major economy is going to give us a rate hike on short-term rates that significantly outperforms that.
And what's especially interesting is that they said, even after we exceed 2% inflation, so first of all, they have to get to 2%.
Right.
After they exceed 2% inflation, they're going to let it exceed inflation while they're still pumping money and expanding the monetary base, which, for people who remember the Weimar Republic and, the Zimbabwe going with a wheelbarrow full of cash, That would seem to ring some alarm bells to say, we're going to keep printing money as inflation's accelerating.
At no interest.
At no interest.
Yeah.
But, it's Japanese stocks up, U.S. stocks up, kind of a greengasm today.
Yeah, we got a greengasm going. We're going to hope it holds. We're going to keep our eye out on that. Bank of Japan, earnings. A couple companies reported earnings. FedEx, a company I feel like we've looked at in the office, and Adobe, a stock that we owned way back in the day but haven't recently. What was surprising there? Anything good, anything bad, anything actionable?
Both of them raised the guidance for the year, not by huge amounts, but they had a decent third quarter and they're looking for a solid fourth quarter. Importantly, the street is taking both results well. You're seeing a lot of upgrades on both stocks actually from a number of different sell-side analysts.
So, a couple stocks to keep an eye on. I always like the people that report earnings out of true earnings season.
Yeah.
I feel like they get, especially if they can announce some good news.
Right.
Especially if they can increase guidance, beat expectations, and do that when there's not as much focus on all these other companies. I feel like it's kind of an advantage at times. Now, probably goes both ways. If you miss, you're getting a lot of the brunt there.
And there is some read-through. I mean, when you're talking about FedEx, you're talking about someone who's really doing a lot of stuff that's levered to GDP. So to the extent that they're beating expectations, it's positive for the economy.
Absolutely. Moving on, Comcast announced they've got plans for a wireless product, a wireless network, whatever you want to call it, that's going to go into their package of services. I had not read a lot about this. We talked a little bit about it. Obviously, Comcast got the traditional internet, got the traditional television, talking about adding basically wireless phone package.
Yeah, I think this is really interesting. And to me, the most interesting piece of it is that it's not a 2020 plan. This is happening, they're planning for middle of 2017, next year. So this is really interesting. It could result in some more competition for the telecom providers. So the way Comcast is going about doing this, they're not building out their own network. They're not buying their own spectrum. What they're doing is they're using their Xfinity Wi-Fi product. And where they don't have Xfinity Wi-Fi, they have an agreement with Verizon to use some of their network. So it'll be interesting to see how that evolves. At least for me, it'd be convenient just paying one provider for everything.
Yeah. And I think the options are always good. I mean, when you start talking about the pool of services that we're talking about here, internet providers, cable providers, cell phone providers, I don't think anybody has a whole lot to say that's positive about any of them. Comcast in particular, I mean, you don't really hear rave reviews about Comcast customer service, but if they can disrupt a little bit, create a little more competition, it could be a real value add for people.
Yeah, I agree.
Couple random stocks or random notes that we're going to hit on quickly because dense day, like I said, we're trying to just power through the Brangelina thing. Wells Fargo recently downgraded at JP Morgan. Stock is down just a tick. Thoughts on Wells Fargo and the downgrade?
Boy, they've just been under scrutiny last couple weeks now.
Those accounts will get you.
Yeah, it's a little bit of an overreaction, I think. But especially this is not when you want to have a scandal.
Right.
2 months before or a month and a half before an election,
it's going to get politicized so much.
Whether you're Mylan, whether you're Wells Fargo.
It's going to become such a hot button issue, and it's also one of those things where the numbers just look staggering.
Right.
And I personally have like 3 or 4 Wells Fargo accounts.
And actually, you may have 8 or 10.
Yeah, I may actually. Yeah, who knows? Could be more than that. But you start looking at those numbers, and they're so staggering. But then it's like you actually scale it to the size of this network, and you're like, it's still not good.
Right.
But this is pretty ridiculous.
Yes.
Target. What did I even have on Target? Oh, share buyback. Still got it. Share buyback, we've used this illustration before, but Target shares are up just a little bit in pre-market trading because they announced that they're going to buy back $5 billion worth of shares. So we've done this illustration before on here, but it's been a while. Ben hasn't been here for us, so he gets to play Pictionary with me for just a few minutes. But when we talk about share buybacks, the way the market typically reacts positively to them. And again, that's typically, sometimes people look at it and say, oh, well, they just borrowed a lot of money to buy back shares. Is that really a gain? Not necessarily. But when you start thinking about investing at its core, you invest in a publicly traded company because you want to participate in the good of that company, the positives, the upsides of that company. You don't invest in a company in hopes to participate in the downside.
Right.
That's not what anyone is ideally participating in an equity investment for. But when you start to think about it, I always use the illustration of a cookie jar. I have to write cookie because otherwise nobody knows what it is. But you've got all these cookies in there. Ben, what's your favorite kind of cookie?
Let's do chocolate chip.
Chocolate chip, so we'll put some dots in there. Intern Barrett, anything other than chocolate chip?
No, that's my go-to.
All right, so chocolate chip, and I know Krebsbach loves the ones that have all the icing on them, so we'll do one of those for him. So cookie jar, right? Right now, that's the good stuff that can come from an equity investment in, we'll use the example of Target, right? But then you have who else getting a share of this? Basically everybody that owns shares, and every share is getting a share of this. So if you've got all of these hands coming in here, and those are hands, not sparkly lines. If you have all those hands going in, all of a sudden those cookies get stretched pretty thinly. But if you can say, hey, we're gonna actually take these hands and this hand out of it, you're getting a lot more cookie. So that's kind of the idea behind a share buyback. That's why it's important. That's why it's perceived as a positive, because people look at it and say, hey, all the good things here, whether it's earnings, whether it's a dividend, whether it's growth, whatever it may be for this company, we're going to get more access to it. So that's why Target is up a little bit on the news of a share buyback. How'd you like that picture?
That was
World
quite
class.
clever, yeah.
World class picture right there. Walmart, I don't know if you, I think I told you this story. So $200 million in cash bonuses to hourly employees for the year. Staggering number, sounds fantastic, but then you have to dig in a little bit more. They're really patting themselves on the back for this. They got 1.5 million employees, and they're able to access these bonuses quarterly. So if you do all that math, we're basically talking about $33 a quarter in bonuses to hourly Walmart employees. Not the most staggering number anymore. So every 3 months, they're going to get, what, maybe half their cell phone bill?
An hour extra per month.
They're going to get that nice little $33 bonus every three months. But way to
That's
go,
33
Walmart.
cents a day.
That's solid. When you start thinking about it, like that's real. That is real money, people. Gary Johnson. Whew, this guy. I mean, he's kind of a joke. He's kind of a joke. He said today on Bloomberg that he cannot win the presidential election if he's not in the debates. I think he could have stopped off after the word election. I don't think he's going to get in the debates. Do we know? Anybody know?
I'm pretty sure
Barrett?
he's not.
No.
He's the guy, like, I love the idea of him. I love the idea of him shaking things up, but he's a little rough.
He's very rough.
Very rough. He wears tennis shoes with his suits. Unless you're a men's basketball coach, can't pull that off.
Start sentences without knowing how he's going to finish them.
Yep. Yeah. Which that's a viable strategy, politically speaking, I think. Debate coming up Monday. We're going to keep hyping this thing because we're so excited about it. Gary Johnson might or might not be there. Chipotle. We hate watched a commercial one time on live Periscope feed. It was like 7 minutes, a love story. Total disaster, we thought, from the marketing perspective. They put out another one.
Yeah.
We just hate watched it.
Yeah.
What were your thoughts on it?
They really worship their vegetables.
They really do.
They have castles, and they put tomatoes on thrones, and they build statues out of avocados, and really make vegetables feel special.
It's so, the commercials are so bad.
Yeah.
They're so trippy. It makes, I'm not a Chipotle guy, are you?
No.
If you don't have queso, I'm not in. Like, that's just a fact. I don't care how fresh your ingredients are. I'm like the other way. Like, give me some queso and like import some grease into it.
Oh, yeah.
And I'm all in. Big Laredo's fan down the street. They're not making these kind of commercials. They're just serving queso.
Yeah.
But not a fan of Chipotle, but stuff like this actually, like, there's people that like these commercials, and actually makes me dislike the people that like Chipotle even more.
Goldman's not having it. Goldman's not having this this ad. They liked the Chiptopia promotion that they had, that Chipotle had, but now there are fewer searches for Chiptopia and for Chipotle in general. And so Goldman actually slashed its targets down, now have a $395 price target on it, down from $445. But if you look at how they actually get to that target, they use a blend of the long-term discounted cash flow, where assumptions kind of rule the day, which is $530. And then if you use kind of more of a market indicator of next 12-month multiple of earnings of 25 times,
You get like 8.
they're talking 260. So, and
Yeah, I don't get it.
yeah, but
It seems like that'd be,
Ackman apparently does that.
yeah, Agman gets it. I feel like, and this is like unscripted commentary that I'm providing right now, so I reserve the right to completely change and contradict myself. But it seems like Chipotle's upsized enough now that scaling it is going to be a really uphill battle in light of, all the challenges they've had with outbreaks and
Right.
that kind of thing. And just the fact that the restaurant space is like, I feel like pretty crowded.
And when you have everything organic, I mean, that sounds great, but there's only so much space. I mean, you can't have organic and have the amount of concentration of food in one location. So I mean,
Right.
you have to, the sourcing becomes a real issue.
Yeah, so you can't have one of these on every corner. You
Right.
can't have one everywhere there's a McDonald's. You can't.
Exactly.
You just can't do that. And again, they're gonna have real issues with me if they don't get queso.
Yeah.
So that's kind of the thing. I mean, I have a whole portfolio of queso stocks. So Chipotle not in it. That's all I got. You got anything else?
That's it.
Awesome. Thank you guys for being here. We'll be back soon. We're trying out a new format on Friday of the Investing Podcast. It's going to be even longer than this, but you're only going to have to deal with one of them, and we're going to get the whole crew out here. So if you have any ideas on segments, tweet at us at Tusk Media LLC, or hit us up on Facebook and just say, hey, I think this would be a cool segment. It could be about investing. It could be about the economy. It could be about politics. It could be about sports. It could be about life. It could be about none of that. Hit us up. We're probably not going to cover certain things, but we'll figure that out when we get a ridiculous request. Y'all have a great day. Talk to you soon.
Tusk Media is a subsidiary of Narwhal Capital Management. Ratings and reviews of Tusk Media content are not to be construed as endorsements of opinions, analysis, or services offered by Tusk or its parent company. The opinions and predictions shared here are professional beliefs at the time of publication. We are not under duress from any of the corporate entities mentioned. This is not a solicitation to take any particular action. Although we are investment advisors, this information should not be considered investment, legal, or tax advice. We strive to be as impartial, insightful, and accurate as possible. We base our opinions, analysis, and calculations on information we believe to be reliable, but we cannot guarantee its accuracy. We can, however, guarantee that our opinions will sometimes be flat out wrong due to a variety of factors. Employees and clients of Narwhal Capital Management may or may not hold positions in the securities detailed and may or may not hold these positions in the future. A full list of all securities purchased, sold, or held during the 12 months preceding the date of this publication can be provided upon request. Unless otherwise noted, all data accessed via MarketWatch or the Bloomberg terminal. Past performance does not guarantee future results. A copy of Narwhal's Form ADV is available at the SEC's website, www.advisorinfo.sec.gov, or from Narwhal upon written request.